Well, good morning. It's Monday, September 16th, and welcome to a whole new week. Well, I hate to say I told you so, but boy, did I tell you so. This market just can't keep going up. It's always something. It's either China, or it's oil, or it's Brexit. We could never have a week of peace and a straight upshot of momentum, can we? All right. So, it looks like oil. This week, it's not China, it's crude oil. There's been an attack on the Saudi oil labs, and it looks like crude oil is going to be higher. And if crude oil is higher, what does that do to airline stocks? What does that do to consumer companies? It makes transports more expensive. Not a good position to be if you're an importer of oil. So the markets are already a little bit lower. As a matter of fact, let's look at the SPY to see how we're doing overnight. Yeah, we're going to open a little bit lower today for sure. There's no question about it. And the odds are we're probably going to go a little bit further down. There's only so much momentum the market can generate, especially with the small caps still lagging behind. I told you all about this last week. If you want to review, watch the videos from last week ago about the Russell 2000. Because if the small caps can't continue the upside momentum like the large caps, we're just not going to see a lot of upside from the overall stock market. We're going to see a little bit up and then a correction pulling everything down. A little bit up, pulling everything down. All right, let's talk about this week. It's a huge week. We have industrial production tomorrow. That's going to let us know if economy is still moving smoothly along, turning smoothly along, or if it's if the brakes are starting if we're starting to put on the brakes. The big news is the FOMC meeting announcement, the forecast, and the Fed chair press conference. This is where we're going to know whether the Fed is going to lower rates again. And then we have a bunch of employment data and account status, including home sales. That's all happening on Thursday. But the big news is happening on Wednesday. And based on everything I'm seeing right now, it looks like the Fed is going to lower rates. If the Fed is going to lower rates, that's going to cause the bond market to rally again. Now, the bond market is pricing in the majority of the rate hike, but not 100% of it. So it looks to me like we're going to get defensive, and it looks like to me like we're really oversold on the bonds. And whenever we get really oversold on the bonds, they typically bounce back. Right now, let me show you something cool here. This is the 20-year bond, and I want to show you the moving average here. We're right below the 50-day moving average. What I would do is I would wait till we're trading above the 50-day moving average for two trading sessions completely above, and then I would go long bonds. I believe we're going to see some upside. I believe the market is going to stay defensive for the next few sessions. I don't believe that there's a lot of upside left. Not for the current swing. We may see more upside over the next month, over the next couple of weeks, but right now the markets are starting to consolidate. We're not going to see a lot of upside over the next couple of days. Let me show you the E-mini here. The E-mini is lower already. This is the S&P before the opening. I'm expecting us to hit the 50-day moving average next few days, and I'm expecting speculative stocks like technology, consumer discretionary. I'm expecting those stocks to calm down a little bit, to deflate back to the 50-day moving average. This is the tech sector. Look at it right now. Looks like it's going to come down a little bit and move down right here. Let me put on the 50-day line here. Don't be surprised to see us come back and hover right around the 50-day line, maybe a little bit below the 50-day line. But notice the stock market made new highs, but tech did not. And that's not positive. Now, what you should be investing in, what you should be looking at, what should you be trading right now? Defensive stocks. Take a look at utilities. This is the utilities sector. It's close to new highs. Now, have you ever seen speculative stocks like technology and utilities near all-time highs? Usually when speculative stocks lead, defensive stocks lag. When defensive stocks lead, speculative stocks lag. We're not seeing it right now. which means the market is not in a clear bullish zone. That means there's a lot of sideways trading action potentially possible. Bottom line is, don't get overly bullish. Start looking at defensive stocks. Look at stocks that are within the consumer staples or utility sector. I'll show you how to find them in a second. This is Costco. It's pulling back right now. We're way above the 50-day line. Doesn't look that bad. Not at all. Let me show you something here. Real simple, real quick. Type in here, XLU. That's the spec. This is the utility sector. Type in the utility sector and then go to constituents. All right. And you'll see a list of all the stocks in the defensive sectors. Same thing with consumer staples. Consumer staples, XLP, utilities, XLU. Those are the stocks you want to look at. For example, consumer staples, look at Costco. Look at Costco right up there. Look at Walmart. Look at Costco. Look at Phillip Morris. Look at Colgate. Those are the stocks you should be looking at. Defensive stocks. Don't look at speculative stocks. We're not there just yet. China, US, no resolution. Higher oil prices, weaker prices for speculative stocks. It means lower weakness in the stock market. Be careful out there. I'll talk to you guys soon. Watch out on Wednesday. It's going to be a big day. You may want to lower your position because volatility is going to get higher. You don't want to trade large positions before major Fed announcements. Talk soon. Oh, by the way, if you guys are getting something out of these videos, if you like these videos, if you're enjoying these videos, if these videos are helping you become a better trader, send me an email. It doesn't cost anything. support@marketgeeks.com. Send me a quick email or subscribe to our channel, like our channel, and comment below. I want to hear what you guys have to say. You guys are the reason why I'm making these videos. If you're not interested, then what's the point? Talk soon.